Again, my name's Jeremy Drane. I appreciate the opportunity to speak. I'm wearing a Circle t-shirt, even though I'm from Libra, because at 9 a.m. East Coast time, or Eastern New York time, so in like maybe 5 to 10 minutes, we're putting out a press release that we're going to run Circle's back office. If you know Circle, they're probably the second largest behind Coinbase crypto company in the world. And so I told them, I'll wear your t-shirt on stage. So that's why I'm wearing a Circle shirt. So I've got some slides, and when I talked to Susan about what to talk about, I've got 20 minutes and I've got 16 slides. I'll move quick, but I thought I would just pose one question, and this is my content. So why is it so damn hard to get audited information in crypto? So they do tell you when you public speak not to swear, but for anybody that's had to do taxes in crypto, that is not the four-letter word you usually use. So what my talk is going to be about is companies out there are dealing in digital assets, but the reality is almost none of them have audited financials. And it doesn't really matter if you look at exchanges, it doesn't matter if you look at startups, it doesn't matter, like across the entire ecosystem, you don't see anybody that gets audited financials. And this is a problem because, we want to say that crypto or digital assets is a new asset class. Well, an asset class requires institutional investors to come in, and institutional investors don't actually come into asset classes when that asset class can't produce a financial statement, an audited financial statement. So I'm going to take you through some of the issues there to give you a sense of just how challenging it is. So I always say that distributed and decentralized data is expensive to manage. And I'll take you through the 5 reasons that is the case. Okay, first, it's really hard to find your data in crypto. And when you think about it, it is this connectivity to a distributed and decentralized environment that is both exciting, there's no centralized provider, but it's also it creates a significant amount of complexity because it's not static. It constantly is growing. So when you look at it the reality is that most organizations have really no clue where their data is. You've got 150 independent crypto exchanges. That number bounces up and down. You probably get 2 or 3 new exchanges a week, and 2 or 3 exchanges die. Maybe not, a little bit more growing than down. There's a tremendous number of OTC desks. So about 20% of the OTC desks make like 80% of the value that's traded. But there's just a tremendous number of places where if you don't want to trade your digital assets on an exchange, you can trade it off exchange, but very hard to get that information out. There's over 2,000 blockchains and wallets out there. So if you're holding your crypto in a public multi-sig wallet, very hard to keep track of all of those wallets across all those blockchains. Then of course there's N number of smart contracts that have data in them that you want to extract from. You've got mining pools that a lot of people just love to throw their crypto in. Really hard to get data out of mining pools. There's pricing services. How do you go from what the price of a Bitcoin is to what that is in USD or any other? And then of course you've got a bunch of enterprise applications out there, and you got a bunch of banks. So if you kind of look back and step back, you're like, oh my goodness, my data is everywhere, and there really is no standards or the ability to extract that information out of the ecosystem in a consistent way. Keep in mind that when you're doing financials or creating a regulatory report or whatever you're doing, it's not a static event. You have to do it consistently over time. That's a big challenge. Okay, next thing is formatting the data. This is one of my favorites. In order to eliminate all the inconsistencies and duplications. The reality is that there's really no coordination between any distributed data venue and somebody else. Like Kraken Exchange doesn't talk to Circle, doesn't talk to the Stellar guys, doesn't talk to Ledger about their wallet. I mean, everybody is iterating their development of their product individually. And so people's security and data standards improve at different rates, or in some cases don't improve at all. But what ends up happening is you get data in, and it has differing types of, the fields are named different, the tickers and the pairs are named different, and I'll show you an example. Data comes in out of order all the time. I mean, if you're pulling data from 25 different venues, almost every single day, one of those venues goes down for some reason, and all of a sudden, even though you have time-stamped data, you might not get it till the next day. Well, what happens if you create a P&L for that day, and then all of a sudden the next day comes around and you get trades from the previous day, now all of a sudden you have to restate your P&L. And for anybody that's in accounting, you know, that's probably one of the biggest no-nos that you can do. Truncation is just a big problem. I mean, these cryptos go out 15, 20 different decimal places. Well, do you take it down to 2 decimal places and round it? Do you take it to 5 and truncate it? Do you go all 23 and that blows up a lot of software? So you just get a lot of problems. And actually, this is a really great one. So Stellar is, you know, usually a top 5 blockchain. And, you know, they have Stellar Lumens, which is their digital asset. And just take a look at this interesting ditty, that it has 1, 2, 3, I think, yeah, 3 or 4 ticker symbols. Actually, there's one other one that's not on there. It's XXLM. Then, in terms of, so what that means is like just say you're buying Coca-Cola. In the US, if you buy it on the New York Stock Exchange, it's KO. And it's pretty much like KO everywhere. If you buy Stellar Lumens, you may have to buy it across a couple different ticker symbols. The problem is that those ticker symbols are actually shared by other digital assets on other exchanges. So you have like BCH, which means Bitcoin Cash, but then there's other digital assets that just decided to call themselves BCH. So you get all these inconsistencies. You also get issues not just in terms of the tickers are weird, but the pairs. So you're always trading one thing against another. So USD for gold, you know, or Bitcoin for Stellar Lumens. The issue is that the way in which that information is represented as it comes into a company is all over the place. We've got capitalization with dashes, lowercase, slashes. So as you can see is that the sheer formatting issue is just a very big deal. The next thing is to rec the data. So let's just say you went out and you found your data. Let's just say you brought it in and, you know, lucky you only did Bitcoin and you only had to deal with, you know, XBT versus BTC. And so you standardized your data. The next question you're going to ask yourself is, do I have everything? And is it right? So you have to ensure data accuracy and completeness. And this is really where I would say there's a lot of good tools out there, you know, Libra being, you know, some of them, but there's lots of tools out there that help you kind of deal with the first 2 issues. This issue of reconciliation is really a pretty big gap. So how do you know you have all your data? And so we have built a bunch of reconciliation tools, both cash, balance, transaction, reconciliation tools. But really, frankly, as I look across the landscape, even with the competitors of ours, this is probably the one area that has the least amount of tools to support. And really, because there's no tools, the companies and the auditors really don't have any really good tools to work with. The next issue is then you've got to process your data. Okay, this kind of gets back to that comment that I made when I was on the couch, which is most people make the assumption that, hey, I'm going to run a gain and loss matching engine. that kind of tech has been out there for like eons. This shouldn't be an issue. And this is where all of a sudden you start to look at your processing engines inside of your firm and you're like, oh, hold on a second. I have a gain and loss matching engine, and that assumes that all my fees are paid in fiat. And so when you buy something when you buy one thing for another, and if you pay your fee in fiat, like US dollars, what you do is you take that fee, you add it to your purchase price, and that's the cost basis of your asset. In crypto, what happens if you pay your fee is always in crypto, which means you're disposing of an asset to pay a fee, which means it's not the same accounting. One accounting runs through your balance sheet, the other is an expense, and it runs through your P&L. So all of a sudden, the core engine that you use to match your gains and losses doesn't work. You get into finance. I mean, really, there's really hardly any rules as it relates to valuation methodologies. I mean, if you have a Bitcoin and it trades at a 7,000 in South Korea, 6,500 in New York, and 6,750 in the UK, what price should you put on your balance sheet? So all of a sudden, all of that machinery you have in your finance function just kind of blows up. It's kind of like, we don't know the answer. You pick up and you call your auditor and they're like, we can't tell you the answer. You have to tell us and then we'll tell you if we believe you. So that sort of is an issue. Controls and rules engines, compliance engines, there really aren't any for crypto. I mean, if you're, it's kind of scary to say, but if you're running a prop desk in a big firm, you have all sorts of controls that don't allow buyers or traders to make certain trades. All of those tools have rule sets that underpin them, libraries of rules. There's no tools, and the rules are still being written. And so, you can't necessarily count on your current internal control infrastructure to make sure that you're managing your risk. And then in trading, keep in mind that what happens is you don't have the ability to see an aggregated position. You can see that you have Bitcoin on Kraken. You can see that you have Bitcoin in a multi-sig wallet, but getting all of that data in one place in real time is nearly impossible because the ramps that you go in to grab your data and pull it out, they speed bump you. They don't let you hit those ramps but maybe once every 5 minutes. Well, what happens if you're running an algo and you're trading 1,000 trades every minute, but you're only able to extract the data out every 5 minutes? So you sort of start to get a significant issue around your ability to see your overall position. So net, the tools and the processes and the governance frameworks that you have in place to manage the maneuvering of cash for digital assets doesn't necessarily work. And this is what I was saying before, the tools don't work. Okay, and then the last thing is luckily, hopefully, you've used our software and you've gotten to the point where you can actually report the data. What we find in this is that, reporting is what it is. A lot of the tools don't necessarily report out the way that you want them to. You're used to pumping information into a BI engine, for example, Crystal reports or whatever. And a lot of the information that you want to put into that engine has all of these other issues, which doesn't allow you to actually report out in a way that you're used to. But of course, our software does all that. So I think some couple of closing thoughts. Happy to answer any questions because we'll probably have about 2 minutes of extra time. But a couple closing thoughts. First, don't wait for regulators to tell you the answer. In this space right now, at least, you have enterprise blockchain and then you have crypto. They're similar, but not necessarily the same, of course. At least in crypto, the space is moving at light speed, and the regulators are really looking for self-regulation. And so no one's going to tell you how to value your assets. No one's going to tell you where your assets are. No regulator is going to tell the crypto ecosystem you have to provide information via FIX or read-only API. Like, those things aren't coming anytime soon, so don't wait for it. Also, pick service providers that actually have done real work. So if you are in the business of crypto, there are a certain group of service providers, both lawyers, insurance people, and of course accounting people, that have done a majority of the work. And then there's everybody else that's done one engagement and is trying to build their business. But I would say that if you're actually getting in it in a big way, really ask for quals of your service provider, because experience is the only thing that is going to protect you. Look for blockchain and crypto native tools. So our tools are used by accounting firms and exchanges, and we always make the argument that our stuff is just completely built from the ground up to deal with the data structures associated with crypto and blockchain. I think as you pull back, what we see in the industry is a lot of people have existing tools. They're going to make them crypto. And really, we haven't seen almost any of them do that. The only thing that and I'm an SAP guy, but the only thing I've seen from any of the big ERP vendors, at least, has just been blockchain as a service type infrastructure. There's been pretty much zero delivery of product in terms of upgrading their core tool suites to work with crypto. And the reason being is it's not one thing that you have to do. It's solving 5 different issues. Next thing is you can't outsource this stuff. So if you get into crypto, you're going to have to build a core capability. Unlike, say, enterprise blockchain, where you can buy a platform like Duncan was talking about, you can do that. In crypto, you have to get into the data dirt, and you have to just live there, because if you don't, you're going to make very minute mapping and issues that will have extremely large consequences. And so you just can't outsource that. And then I think the last point is what I said before. Audited data is the language of investors. If you want to get into crypto, you need to find a way to get audited data. Otherwise, you're going to limit your ability to grow your balance sheet. Investors do not, at least in crypto, institutional investors, pension funds, family offices, all of those types of folks, they just are not interested in taking those types of risks. And so you've got to do things the right way. And what we would say is getting audited data is probably the most important thing you can do, because that's the language of the people that you're hoping to fund your business. So those are the issues associated with crypto data and why it's so hard to actually get it audited. I've got a minute if anybody has any questions. Otherwise, awesome. And Susan, thank you very much for the invitation to come here. And again, Libra, we're out, Libra.Tech. We're out of New York. And if you're in crypto in any way, shape, or form, we would love to have a chat if you're looking for tools. So, any questions? Any brave individual out there? Oh, yeah, right here.
Who was auditing the circle before you guys? Were they being audited?
Okay, we're not, let me make sure. We provide tools to either accounting firms so that they can audit a company. And just to give you a sense of the scale of our work in that area, there's about 500 hedge funds with crypto. Our tools will be used to audit about 230 of those funds. So we have accounting firms that use it, and then we have enterprises, crypto enterprises like a Circle, that will use our tools to essentially produce the transactional information that will go into the financial statements. In about 2 weeks, we will get a SOC 1 Type 2 certification, which Susan knows well, which bottom line means that the data that sits within our system for that enterprise is actually data that auditors can rely on. So, we serve both the accounting profession as a tool provider and the enterprises as a set of tools. But in terms of who Circle is, auditor, I don't know if that's public, so I would not be able to comment, but they certainly will be able to be audited now. Cool? Thank you so much. I appreciate it.